Profits for Singapore's second largest bank, OCBC, slipped 6% from a year ago in the third quarter to touch $1.17 billion. Now, that was due to a one-off $91 million charge at its Indonesian subsidiary as it prepares for new reporting standards. But excluding the one-time costs, the group reaped in a profit that rose by 1% from a year ago at 1.26 billion. Net interest margin rose by 5 basis points to 1.77%, supported by gains from assets and customer loans. Net interest income, meantime, was up by 6%. The lackluster global economic growth has driven the bank to downgrade its asset quality of corporate accounts within the offshore service vessels as well as transport sector. Protests in Hong Kong, well, they have caused a reduction in loan demand as well, but the bank says that its medium-term growth outlook in the country continues to be stable despite short-term fluctuations.
There will be reduction in private investment. There will be lower retail sales. There will be lower tourism. There will be lower F&B spending. In the medium term, it depends on how long the event is going to last. And when it's ended, we still believe it's an event risk. So the event is going to come and go. Once it's ended, what other actions are taking place in Hong Kong to prop up the local economic activities, and whether those are successful or not.
The Singapore market makes up more than half of the core profit for the bank and about 70% of total mortgage loan issuance. And while demand has remained flat on year, well, the bank says that measures put in place for responsible financing have prevented over-leverage.
If you look at Singapore context, I think the property prices are still holding up pretty well, right? So in a sense, and also if you look at employment, I think the employment situation in Singapore is still holding up very well.